Hey y'all, Mo Rahim here. This is Mary Jane Markets. This episode is the third video recapping August's news cycle. The first video recapped Q2 earnings, second was all sector commentary and government policy updates, and this episode will be going over company-specific news. Again, I want to apologize for being AWOL for most of August. I have one more family wedding event tonight, and then it should be clear skies from here on out for the foreseeable future. So I should have more time to focus on the show. Today, we'll be going over news on Curaleaf, Trulieve, and Cresco Labs. So let's jump into it. First up is Curaleaf. I found this protest that they lodged to the Georgia Medical Cannabis Commission on August 3rd. For new listeners, we've covered this commission before and the late July session where they awarded 3 low THC, aka CBD, licenses, the first time they've ever awarded licenses in Georgia. Curaleaf did not win one of those licenses, hence this protest. I skimmed, it's quite lengthy as you can see. The commission gave Curaleaf a score of 827.5 points out of 1,000. And they're basically saying that the scores they've received in certain categories should have been higher, and using these new scores would have made their total the highest scoring applicant at 981.25 points. But they don't give any good reasons why they were marked lower than they should have been. It seems really subjective. In all but one category, they claim that they should have received a perfect score. And being an investor, I want to give them the benefit of the doubt, but when you're grading yourself, there's probably some bias slipping in there. And to be honest, this reads like they're crying about the outcome. I didn't see any substance behind their claims, and this just all seems like hurt feelings without any weight behind them. They didn't get a license, and their competitors did. So they're doing what they can do, which is lodging a protest here, but I don't expect this to go anywhere. Anyway, I thought I'd report on it since I came across it, and since this is the first time I've come across something like this. If they really do want to enter the state of Georgia, they'll probably have to do what GTI did and end up buying a company that did win. All right, jumping over to Trulieve and Kim Rivers specifically, I came across this tweet from @BettingBruiser, which was posted on August 17th. This is a picture of an SEC form. Let me see if I can resize this. All right, hopefully the pertinent information is now readable on a normal screen. So this is a picture of an SEC form showing that Kim Rivers, CEO of Trulieve, purchased around 3,500 shares of Trulieve stock on August 16th. However, when I go over to the SEC's website, these are all the filings for Trulieve. I don't see this form here, or this filing here rather. There's really nothing around August 16th. So if anyone can help me find this form, that would be much appreciated. I don't like reporting on things without at least finding the real source or multiple sources. Either way, in the grand scheme of things, this isn't a big deal. But the 16th was a few days after Q2 earnings were reported, and as we saw, there was a bit of a sell-off after earnings, so this to me might have indicated that she saw some irrationality in that sell-off, but since I can't substantiate this information, I'm not reading too much into this. But while we're here, there is another filing that we can review. This S8 is an update to the company's stock compensation plan. So this was filed on August 30th, and if I open it up, the interesting bit here is this breakdown. Let me see if I can make that bigger. All right, hopefully you can read that on your screen. So it looks like there are shares being added to 2 plans here. This bottom one is for 4 million shares And those are being added, as we can see from footnote 4 here, to the Trulieve Cannabis Corporation 2021 Omnibus Incentive Plan. And at $27.13 a share, that's being valued at around $108 million. This top one is confusing though. So for about 1.4 million shares are going to the Cheyenne Exploration Inc. stock option plan. For those that haven't been following Trulieve for a while, Cheyenne Exploration is the company they reverse merged with to go public. So I'm not sure if this is just a vestigial plan hanging around or why shares are being added to it. There's no explanation of that in this filing. There is a link to the plan. Here that is, but if I scroll all the way down, it doesn't contain any names or details. So I'm a bit perplexed on this one. My assumption here is that these are either old obligations, given the maximum offering price per share is at $16.59, which is far, far lower than what the stock has been trading at in the recent past. So this has been added to my follow-up questions doc I have for this company. I'll do a little more research and maybe reach out to IR if I can't answer. If you have any insight into this, please comment below. But we're going to move along. Some more news coming out of Massachusetts last month was the starting of selling clones in the state for home grow. For the viewers that aren't familiar, clones are just cannabis plants that will bloom to actually cannabis. This has the advantage of starting from something that A, produces good cannabis, here botanists talk good genetics, and B, it's easier to grow something that's already sprouted rather than starting with seeds. So Trulieve announced this on August 18th. I think this is a smart move to capture some sales in the home grow market. It's a win-win all around. Trulieve gets sales on these clones, and the growers get to buy from a reputable company rather than a shady website. There's not too much more to say on the topic. I expect that the population of consumers that are going to choose to grow product at home by themselves is probably going to be pretty small. I don't really expect the margins on this side of the business to be that great, but this is a way to capture some of that business, and then you get those home growers into the stores more, and maybe they choose to buy some higher margin products like vapes or gummies. All right, let's move on to our next Trulieve topic. So also last month on August 17th, Trulieve appointed a new CTO, that's Chief Technology Officer Niliam Jala, who previously served as Vice President of Global and Digital Technology at Hallmark. I have to say, I'm a little bit disappointed with this, especially with CEO Kim Rivers claiming time and time again that she wants Trulieve to be extremely data-driven. Yes, it's easy to be an armchair critic, but I do work in tech, and looking over his past experience, this doesn't seem like the guy. Here's his LinkedIn profile. He's never served in a CTO role before, and I really, really hope that this is a decoy email address for spam, because I will be supremely disappointed if Trulieve's new CTO uses Hotmail. That is something my tech illiterate parents would do. Scrolling down to his experience, you can see, I'll zoom in here, now CTO of Trulieve, previously a VP at Hallmark, not a very tech-forward company. And then before that, Family Dollar, again, an unimpressive company. I would have definitely preferred someone coming from a company that has demonstrated technology to be a core competency. If Trulieve truly wants to be data-driven, they want to deploy machine learning models to improve yields in their grow ops, help with inventory, to help drive sales. All of these things that are very possible, given where data collection mechanisms and applied machine learning models are today. That isn't science fiction. If they really want to do all that, and I just have his CV to base this off of, it doesn't really seem like the guy to do it. Would have preferred someone from Google, Amazon, Facebook, Salesforce, or other software related companies. This seems like the opposite. Like they only want to focus on running their IT department, point of sale system. Anyway, best of luck to them. Being an investor, I really do hope they'll be able to achieve those goals. But seeing stuff like this makes me doubt that and makes me think they're just another company using buzzwords like big data, machine learning, AI to impress unsophisticated investors. All right, moving on to my last update on Trulieve for today. Hopefully this is the last time I have to cover this, but it always seems to get a decent amount of attention on the internet, so I want to at least touch on it to keep you guys up to date. That is the trial of CEO Kim Rivers' husband. Last month, the trial came to an end with husband JT Burnett being convicted of extortion and fraud. As I've mentioned before, the company is not named or involved in the case at all. I don't want to go into details of that case because of that. Of course, I imagine this has to weigh on Kim, and the effect of that is just something each individual investor has to consider themselves. But to close out this topic once and for all, I'll read you Trulieve IR's statement on the topic. We have consistently maintained that neither Trulieve nor our CEO are involved in the case. The board of directors continues its strong support of Kim Rivers, its chairman, CEO, and president, and the strategic vision for the company that Kim has designed in concert with the board. All right, shifting over to Cresco Labs. On August 17th, they announced the acquisition of Blair Wellness, which they describe as a top-performing dispensary in the state. In the release, they say that the deal is scheduled to close in Q4 of this year. It looks like it's in a good location. The building 15 minutes from downtown Baltimore, and it's centrally located. They also highlight the Maryland market here, so we can put this transaction in context. Let me zoom in just a bit here. All right, hopefully that is easier to read. As a reminder, Maryland is a medicinal-only state. They say here that it's the 18th most populous state in the US, with approximately 6 million people. I want to hop over to my market landscape spreadsheet here. All right, so for new listeners, this is a spreadsheet where I've taken each US state's GDP and then proportionally distributed my estimate of the potential total cannabis market across each state. I go into a lot more depth on this spreadsheet in the very first episode, but so Cresco says Maryland is the 18th most populous state. It is, in fact, the 15th largest market in the nation by GDP. And I personally think that is a better gauge for how large the potential cannabis market in the state can be, especially when the state goes recreational and allows purchasing for residents. So in the year 2020, they sold $539 million worth of cannabis products. And I estimate that the potential total market, both illicit and legal in that state, is around $3 billion. But if we go back to our press release from Cresco, so hopefully that puts that Maryland into perspective for you, which is what they're trying to do here with this section. They are also reporting annualized retail sales of around 500 million. And it looks like they've spoken with or done research into the sentiment of how the state government is thinking about recreational, and they expect a bill in 2022. Just a side note, rumblings like this I don't cover on this channel. Some local congressman in every state, every week, is going to say something about the topic, and that'll get reported on, and then it gets spread out everywhere in the news cycle, and that's not really anything material in my eyes, and it just adds to the noise of what constitutes as news in this sector. Until there's actually something on the books and it's likely to pass, I'm probably not going to report on it. There's already more than enough that all of us are trying to keep track of in this space. But going back to the transaction, this press release says that the transaction implies a 1.8 times 2021 revenue multiple that's going to be satisfied through the payment of cash and a 24-month promissory note. The transaction will be completed on a cash-free, debt-free basis with a mutually agreed upon normalized target level of working capital. The cash consideration would be payable upon closing of the transaction. All right, so let's break that down. Implies a 1.8 times 2021 revenue multiple. So that's a multiple on top of an estimate of where this dispensary will close out sales for this year at. And at first glance, 1.8 times revenue seems really cheap, since the norm lately has been for around 3 to 5x revenue. But I think we can reason through that. And this is partly why I don't like using multiples in investing. My personal opinion is that they're pretty useless and abused. Maybe they're useless because they're abused, but they put this deal in terms of that, so let's talk about it. First of all, this is a purchase of just one dispensary. This isn't a sprawling retail chain. They don't tell us how vertically integrated they are, so I'm assuming that they're not. So just one store, I would say, definitely deserves a lower multiple. This is also a medicinal-only state right now, with a run rate for 2021 of around 550 million in sales. And I'm basing that off of reported sales figures coming out of the state for the last 6 months. And lastly, the framing of this multiple I think is important. It's really an estimate of 2021 sales, which can be a subjectively high or low estimate with bias creeping in there, which would make that multiple look really good. Moving along, they say here that the purchase is being satisfied through a cash payment and a 24-month promissory note. So first off, this is non-dilutive to Cresco shareholders. They won't be issuing more stock in the market to buy this company or giving the old owners stock in the deal. I presume they'll get a relatively small amount of cash at the closing, and a note that most likely payments will be made in fixed intervals over those 24 months. They also say that the transaction will be on a cash-free, debt-free basis, so no other cash or debt changing balance sheet between the owners or the companies, with a mutually agreed upon normalized target level of working capital. Working capital, for those that don't know, on the balance sheet, there is a current assets and a current liabilities portion. So current assets are things like cash on hand or other liquid instruments that can be converted to cash quickly. And current liabilities is any payments that need to be made in the current period, which is usually 3 or 12 months. So current assets minus current liabilities gives you working capital, basically how much liquidity or excess cash a company has. So they've just agreed to maintain a certain level of liquidity so that these fixed payments over those 24 months can be made. Sorry if I'm over-analyzing this, but a super interesting deal, at least more so than just a straight up purchase. Let me know in the comments if you like how granular I'm getting or if I'm boring you. But why is there all of this extra stuff in here? Why not just a straightforward buyout? Well, that's because Cresco wants the current owners to stick around for at least 2 years. They're the ones that know the business, and maybe they like how they're running it, or Cresco thinks this is how long it's going to take for those owners to train up their own staff. They don't want to give them a lump sum payment upfront and have them walk out the door right away. And a deal like this, where payments are made over 24 months ensures that they stick around. So hopefully that all made sense. And hopefully I don't see a sharp drop off in viewers right there. All right, another piece of Cresco news is that on August 13th, they closed on a $400 million senior loan at 9.5% interest. With this, they are planning on retiring an old $200 million loan that had a higher interest rate. We've seen this to be a common strategy amongst our MSOs as their businesses grow, and they're seen as less risky and they're able to borrow at lower rates. However, this is still a very high interest rate in today's market. The average cost of debt across all companies in the US, not just the cannabis sector, is around 3%. So in my eyes, this is still very, very expensive. And this is the reason we see Charlie Bachtell, CEO of Cresco Labs, advocating so hard for safe banking, or big B banking, as he puts it, to open up the credit markets for cannabis companies. Just to drive this point home, a higher cost of debt means you have a higher cost of capital. Higher cost of capital means you have a higher discount rate. And that means you're discounting future cash flows at a higher rate, maybe 6.5% higher, which is going to bring down the present value of your future cash flows, which brings down the value of your company. You know, that's just valuation 101. Anyway, this is still a step in the right direction. They've lowered their interest rate and added about $200 million to their cash on hand, which, if I'm remembering correctly, based off of their Q2 balance sheet, this should bring their cash on hand to more in line with their competitors, to around a little over 300 million. And the last piece of Cresco news I have for you is a $40 million expansion planned in Ohio to increase their cultivation and production space. This is being reported by Biz Journals and MJ Biz Daily on August 24th. So this is another state they're trying to position themselves well in before it flips to recreational. This is going to be a 24,000 square foot processing facility and a 71,000 square foot cultivation facility. I think this is a smart move. Jumping back to my market landscape spreadsheet, Ohio is the 7th largest market in the nation, which is still a surprise to me. And I estimated that they only sold around $260 million in product last year, given that they only report patient counts in the state, so that was an estimate. But that lines up well. Sorry about that, I've zoomed in. Here's the release again. So that lines up well with what MJ Biz Daily is reporting, what their own fact book projects for the state's market, that it will grow more than 50% this year to sales of $350 to $425 million. So I'm feeling pretty good about those independent estimates I'm making. All right, that's all the company news I have for you today. But I do have an ask, and this isn't investment related. I came across this StratCan article about the waste created and environmental impact that cannabis products are having. I've seen firsthand how much plastic, cardboard, and glass is used to package these products. So if there is a large cross-section of investors and consumers viewing this, please make sure you recycle what you can, or at least that it end up in the trash. If you don't care about the environment, let me try to look at this through an investment lens. There are large parts of the investment world that care about being green and pro ESG. We've seen the negative headlines around massive dirty electricity usage and Bitcoin. We don't want this to turn into that in our space. So from what I've seen, everything that your flower product comes in is recyclable. This article points out that vape carts are also recyclable, so please do the environmentally conscious thing here. That's it for this final recap episode of August. Thank you for listening. If you want to reach out, my Twitter handle is @MJMarkets, or my email is maryjanemarkets@gmail.com. If you would like to support this channel, my Patreon is patreon.com/MaryJaneMarkets. But all I ask right now is that you share out my content to places where you think others will like it. Word of mouth is the only way I have of growing this channel. Thank you.